Southern Africa's finest source of quality engineering components and expertise. BMG.
From Creamer Media in Johannesburg, this is the Real Economy Report, our top stories this week. The Satellite Applications Center of the CSIR inaugurates a new satellite tracking dish. Gold is still on an upward trend, and General Motors is still forging ahead in South Africa. The Satellite Applications Center of the Council for Scientific and Industrial Research has a new X-band satellite tracking dish. Keith Campbell reports.
South Africa has been involved in the tracking of satellites and reception of satellite data since the dawn of the space age. For more than 4 decades now, this activity has been centred on what is currently called the CSIR Satellite Application Centre at Hartbeespoort, West Pretoria. The centre manager is Raoul Hodges. Raoul, you recently installed a new X-band antenna. Why did you do it and what does it do?
Well, during the last 3 years, we've experienced a huge growth in Earth observation. We've probably experienced a growth of about 30% year on year. By looking forward, we expect the growth to be even bigger. And our antenna capacity was starting to dwindle. We were battling to keep up with the amount of passes we do during a day. And therefore we made a decision to purchase a new X-band antenna, 7.3 meter antenna, fully automatic, so that we can look for the future and keep up with this growth. And not lose valuable data which is supplied to government departments.
You also recently won a contract from the European Space Agency regarding the Galileo program. Can you tell us what this involves?
Galileo is the next navigation network of satellites that will be put up by the European Space Agency. And in order to be able to track their satellites and housekeep their satellites, they needed stations across the world. So the Satellite Application Center was fortunate to win a bid to put up such a station here at Hartbeespoort. The station will consist of some civil works, a building specialized for the equipment, and 6 antennas, smaller antennas, which will then track these satellites on a daily basis and produce the necessary data for navigation purposes in South Africa.
Gold still appears to be on an upward trend. Mining Weekly's Martin Creamer speaks to GFMS CEO Paul Walker after this commercial break.
Southern Africa's finest source of quality engineering components and expertise. BMG.
The gold price, which is so crucial to the South African economy, is not an easy price to call in today's volatile financial world. To find out more from one of the world's most authoritative sources, the Real Economy Report asked GFMS CEO Paul Walker for his view.
Investment is going to be strong, driven by uncertainty and fear, and we should see $1,100-$1,200 gold prices in the next 6 to 12 months without any great difficulty.
Many individuals are getting their hands on gold to counteract the world's financial insecurity. Paul Walker again.
Quite frankly, a lot of people are voting with their pocketbooks. Just have a look at the retail gold investment numbers over the last 6 to 9 months. Massive pickup. This is people actually buying physical and take it home to put under their beds. People are worried and people are voting with their pocketbooks, and that, I think, is going to take gold $1,200, $1,300. If you play the mind game that the inflation bogeyman is out there somewhere, and there is a school of thought within GFMS that this is something that's quite possible, then $1,400, $1,500 gold prices are not off the cards.
The central banks have been holding on to their gold, which is another indication that even the mighty are placing faith in the yellow metal.
We have started to see some small strategic purchases taking place. That, I think, is significant. Bottom line, central bankers have changed their attitude to gold.
But the International Monetary Fund is going to sell off some gold, which caused havoc last time it did so.
The market's going to take this in its stride. I don't think this is any real cause for concern, but all other things being equal, If you were a gold bull, would you prefer not to see IMF sales? Well, of course, but I don't think it's a big issue.
We've just heard from Paul Walker with his authoritative GFMS report. The gold survey is out again, and the good news from the gold survey is that gold will continue to trend upwards in price, not falling too far below the $900 an ounce level, but also not rising too far above the $1,000 an ounce level. This is Martin Creamer with the Real Economy Report.
US vehicle manufacturer General Motors is in trouble, but what exactly does this mean for South Africa's Isuzu, Opel, Chevrolet and Cadillac drivers? Irma Fenter spoke to General Motors South Africa MD Steve Koch to find out.
The US government has agreed to provide General Motors with bridging finance until the end of May, following which the embattled vehicle manufacturer may be forced into controlled bankruptcy. GM South Africa MD Steve Koch explains what bankruptcy under US legislation would mean should General Motors be forced down this road.
What should be clear is that General Motors is committed to making sure that its US operation gets restructured quickly. We'll do everything it takes to try and do that outside of court protection, but if it's necessary, with the backing of the administration and the resources put at its disposal, it will enter into a court-supervised restructuring under the bankruptcy code of the U.S. U.S. bankruptcy code is intended to preserve value, not to destroy it. So it provides protection under court supervision, protection from creditors to enable time for the company to work through liquidity issues, debt issues with those creditors, and come up with a restructuring plan that enables it to emerge from protection in a healthy manner to enable it to continue operating.
Koch says a court-protected bankruptcy should see GM emerge as a smaller company, selling a reduced number of brands, and no longer in need of further financial assistance from the US government.
So that's different than what you would find in international terms, where you go into this kind of a liquidation environment where the company's liquidated assets are distributed and creditors walk away with whatever portion they can acquire from it.
Koch is confident a bankrupt GM will not have a severe effect on GM South Africa's local operations.
Remember, those subsidiaries like GM South Africa are of the corporation, of the holding company. So we're not a subsidiary of North America. North American operations, or in this case U.S. operations, would be placed into protection under the bankruptcy code according to the need for protection. So you have selective assets of the holding company that would fall under protection of the courts if, in fact, it goes that way. General Motors is still committed to resolving this outside of court protection to the extent possible. It's simply that as time goes by, it's clear that it may be more necessary to resolve it under court protection or to get it done quickly. So GM South Africa is not a subsidiary of the U.S. operation. GM South Africa is one of many subsidiaries around the world of the corporate holding company, which owns the shares of our operation down here. So it has no impact on us other than the extent to which we would be sourcing product out of North America, and that's minimal. We get material for Hummer assembly, and we have all of the material that we need for our foreseeable schedules already in hand, and we receive Cadillacs from the U.S. operation, and we've made it a point to acquire the adequate inventory to enable us to go through a 30, 60, 90-day period that such a restructuring could take if they were to go that route. It means nothing in terms of our cash flow because we're not getting any cash from the U.S., and certainly any funding that would go into the U.S. operations from the U.S. government or Treasury would not flow through to us. We don't need it for our future vehicle programs, and we don't source the vast majority of our product from there. The product that we source from comes from Korea and Thailand and Japan and Europe and Brazil and Australia. And frankly, we do all of our own warranty, all of our own servicing, all of our own service parts. So it has no implication whatsoever for GM South Africa, other than the extent to which that there's any focus or attention paid to what's taking place in the U.S. and needing to clarify the situation like we're doing today.
And now for a sneak preview of this week's Engineering News magazine. Read how Gauteng gets set to take the free out of freeway with the introduction of an electronic tolling system. We report that Nissan South Africa remains committed to its plans to raise production at its Roslyn plant to 40,000 units a year. And read how the design changes to the 4th generation pebble bed modular reactor will delay the construction of the demonstration plant. And in Mining Weekly this week, read our cover story on Toronto, the world's mining finance capital of the world. Read a report on the view held by Merafe Resources CEO Steve Perry that the ferrochrome price can only go up. And news that Brazilian major diversified miner Vale has started development of its $1.3 billion Moatize coal project in Mozambique. That's Creamer Media's Real Economy Report. Join us again next week for more news and insight into South Africa's real economy.
Engineering news, not just for engineers.